Good morning, everyone. Welcome to Monday, TopstepTV, the London session. All right, so we already have some questions, and I will get to all of those in due time. Let's see what we have. Well, this is the rollover week for equities, and even though I don't think that Topstep is rolled yet, I think they will be doing that today. So just be careful which contract you're trading today. When I looked at the CME website, I can see that most of them have actually rolled, and then on some of my other platforms, NQ and ES have already rolled to March. Similarly, RB, so gasoline futures, RBOB, that's rolled into I think that's the March contract. Let me just double check that for you. But I think we went straight into March. And there's a bit of a discrepancy here, with, again, some of the platforms still staying on January, but others rolling into, actually February. It's not March, it's February on RBOB. So yeah, just be careful with which contract you're trading, because if you're trading an the out-of-month contract, what you might find is that you're one of the few people left trading that, and then you're going to have this like massive spread. So if you notice that, just immediately close your positions. And, either wait or see, whether you got the contract right. Now, I know that Topstep should roll automatically depending on the volume, but my experience is that that's not always the case. So sometimes it's due to the team just not being awake yet. So yeah, keep that in mind. All right, let's have a look at who's around, do a bit of a roll call. We've got Real Estate Talk, we've got Dan Trader, Gigi DeMonaco, Lido is here, Dave's Pirate Life, obviously our lovely moderator Bruno. Who else we got? We got Amanda, Storm Soldiers, Sarah Lucas, Teo, Krista, Michelle, Mohammed, and Paul H. Good to see you here, Paul. Great session last week. I know that it was a bit of a weird day for everyone, but always good to see you. Okay, so let's have a look at these questions. So we have Dave asking about Topstep DAX update. I mean, at this point, your guess is as good as mine. Obviously my edge for London is DAX. So when we were talking about running these sessions, there were plans to bring DAX in very soon, but we kind of started in July thinking, well, they're planning it for September, let's just kick these off. However, now without DAX, obviously this is all a little bit more difficult because my edge for the products that we already have is not in London. So obviously that introduces some challenges, and therefore we're going to keep this more as a class until we get DAX, right? So I don't know. They keep moving it. If we want it faster, yeah. So now they moved it further, and here is. You can now see, so they went from February the 28th to March the 31st. So at this point, I'm kind of losing all hope that we are ever going to get DAX. But I know that I'm here and I'm on their personality, but there's not much that I can do about this, right? The only thing that you guys can do is to upvote this to like 400 or 500 votes, and then they may push it forward. But until then, they just keep moving it, and they keep moving it, and they keep moving it. And at this point, I don't really know what's going to happen there. I can see that Dave also said that he's bought Eurex from a competitor. It hurts me, it hurts me to hear that, but, some of us are using DAX as a big main product, and if Topstep doesn't have it, I can understand that, right? It's not nice to hear that, but if you don't have DAX and you want DAX futures, you have to go to a company that has it, right? Which means that Topstep is losing out customers. So, take it as you will. But if we want DAX in Topstep, we're going to have to keep upvoting that Eurex post until at some point they decide to get it. So, yeah. All right, let's have a look at some of the other questions. News on Blatic for Ninja. So we are still working on that. Obviously, I've had a little bit of the disruption in my life because of the house stuff that I'm doing at the moment. But we are still aiming for at least one of the indicators to come out, maybe by the end of Q1 in 2025. So that was something we were planning. And that's still somewhat on track from last time that I got in touch with the team. Hoping to get more of our indicators out for Ninja probably by Q2. But, it all depends how easy it is or, how difficult it is to actually translate all of the code and the complex stuff that we already have into the Ninja C# version, which is not that great because they're still kind of lagging. And one of the things that I've spoke about with my team is that they did try to use some of the new stuff in C# and then realize C# is not up to the latest version in Ninja, so they had to roll that back. So there are always challenges when you're doing things like that. Anyways, but we are still on track to get some of our lovely indicators in 2025. Now, Amanda says, good morning, Dee. Could you please take a look at RBOB? Curious as to what caused the spike on Friday morning during London. It was some news. So it came from UAE. They said they wanted to curb oil shipments amid OPEC plus push for quota discipline. We also had some Canada numbers that came out on Friday, so all of that pushed the crude oil and RBOB into a bit of an unusual day. But that happens every so often. You're sometimes going to have a pretty lively overlap. And that the overlap being pretty volatile is not that unusual. It's around about the time when everybody's waking up across the pond and they start doing the pre-market activities, right? So you will see that increase in activity in crude oil and in RBOB. Now, RBOB is obviously pretty volatile, so naturally any kind of increase in volatility is going to be more amplified in there. But that's a beautiful thing. You don't want to trade something that's not moving. And it's one of the reasons why I've moved to RBOB, even though if I look at the volatility index, if I look at OVX, you will see that it's almost climbed up to 35. So what does that mean? Well, 35 and being over 35 and closer to 40 is my sign to kind of start trading crude oil more, because 35 tends to be, OVX being over 35 tends to be pretty decent day trader conditions. Now, I would actually like to see it at 38 and 40 before I come back to crude oil. And in the meantime, I will still be using RBOB as sort of like a twin. So I use most of the levels that I have in crude oil and I express my position in RBOB instead, right? That's worked for me pretty nicely. Let's have a look at gold. Gold could be bouncing from the area of previous balance. So I'm going to go up to the daily chart. So we had this big, let's go down to just one chart here. So this is a daily chart. So there was this big area of balance, right? And it took a while, and then it broke out. If you were following what Hogue was saying, there was actually increasing open interest as this was going on. And the delta was going increasingly negative. So they were trying to get everybody short so that once they broke out, they went higher. Why? Because open interest was increasing. It means that there were new longs stepping into the market. And Ho actually saw that pretty nicely, and he was in, I believe, on this good portion of that move. So that was amazing. Now, what else do we have? Well, we have a return to balance. Every time we come back to these areas of demands that previously brought pretty decent moves, the likelihood is that something similar will happen again. So if we can get a committed move back towards the London value low, which is 26.84.6, but I also have an options related level that is close by at 26.80. So 26.80 is kind of like my cutoff point where I can look for further longs. That will be my signal to try that mean reversion to the value area. Now, the way I like to do mean reversions is not really via breakouts. I like to kind of catch them a little bit earlier, which, it's not maybe the best choice for novice traders, because you would experience a few more losses. As long as they are contained and it's not really a full -1R, then that's fine. This is how some of us who have, between, like I've had a long-standing accuracy between sort of 43 to 45% accuracy, but that's because I like to do those like little tests, and they're usually just a few ticks, or 10, 15 ticks. And then if that doesn't work out, I will cut it. And that leads to a reduced accuracy, but then once you get the mean reversion, you've seen I can get 120, 160 ticks, 200 ticks if we have a pretty volatile market and, very nice liquidity that can take you up there, which then brings that risk reward to, at least 2R, sometimes 3, 4, and 5R. So that's kind of how that works. And if we manage to go lower, that would change things a little bit for me for London, because that means I will have to wait for a better area. Right now, we're still inside the initial balance on gold. So there's really nothing for me to get involved in, because the other time frame participants have still not come to the party. So we're going to be waiting to see what happens. Quick overview of DAX. DAX has failed its auction. And DAX is still in the December contract. Now, just some of the levels of interest that I have on there. There's obviously overnight VWAP, but that's kind of smack in the middle of the initial balance. And if we're looking at the longs, we're actually below London value from Friday. So that's a good thing. We have the volume point of control from like 4 weeks worth at 24.21. If we manage to get over, let me just find DAX here. If we manage to get some traction from this bounce that happened at 23.50, I think that would open up some possibility of going through 20,400 and then towards the next area of 450. So all of those are kind of my little stepping stones towards the ultimate target of 500 for this week. And there is a rollover that's going to happen. Let me just see what else. Yeah, so all the equities will be rolling over on the 20th of December. So keep that in mind. And whilst the ES and MQ have already started its rollover, DAX still seems to be stuck in... DAX is still in December. So, until that changes, I'm not sure how much movement we're going to get. Like, sometimes you can get this offload into the new contract, which is fine. And that causes a little bit more liquidity to flow, because everybody has to change contracts. So they have to bail, effectively. When that's going to happen in DAX, I don't know. It might be later today. And if that's the case, we will see a better movement. There was a pretty nice move during the US session on Friday. But whether that's going to be continuing into Monday, obviously nobody knows. For now, they do seem to be failing the auction. So the first step would be to see what happens around that to 20,400. That would be my first area of interest. If we manage to clear that with some confidence, then we have more upside and a potential for kind of an asymmetrical day type where we go back into the mean reversion, having probed below the initial balance. So that will be my read on DAX today. Let me do the full screen here because I didn't do that earlier. So yeah, I answered Amanda's question. So that was the reason for RBOB going into the big spike. It was the OPEC news. As usual, you need to keep the financial juice open. But let's have a look at what's going on with RBOB on the daily chart. And also to have a look at its twin CL to see how they relate to each other. Now on Friday, CL was stronger, right? So CL was the stronger of the two. And that relationship tends to change every day. I would say that crude oil is still stronger today. Why? Because it almost made a higher high. So if you can see on the daily chart, they look very similar, right? But one big difference is that, crude oil actually did make a little bit of a higher high before it started to retrace, which means that out of these two, if you're going to sell it, sell RBOB. If you're going to buy it, buy crude oil, right? That's another thing that I look at when we have two instruments that correlate heavily between one another is to see which one is stronger. So if you have a setup for a long, obviously don't go longing RBOB, because crude oil is going to be a stronger of the two, especially if crude oil is still showing the volatility that is pretty appropriate for the intraday liquidity and momentum. If that's not the case, and if crude oil is just sat in like 30, 29 OVX, 25, which is pretty terrible, then just avoid it altogether. And in this case, I would not even look at crude oil because it's just not strong enough to move anything. But when they're correlating nicely and when there's enough volatility, then yes, there is definite value in getting the view from both markets. Paul H says, would you say this is the last week to trade as volume will be too low to follow normal setups? Will you trade after Friday? Well, if I'm going to be looking at how I've done things in the last years, I usually stop trading for this week. I would trade up until the 15th, and then I would take an extended break until basically the second week of January. So sometimes even third week of January, depends on what's going on. So I don't really like to trade over Christmas periods, especially not these kind of setups. If you're doing like options and spreads and stuff, that can actually be a lot more lucrative over the quieter sort of Christmas week, but not trying to find momentum trades. Now this week, because of the rollover, we may have, and obviously we have the FOMC rate. So I don't think this is going to be the usual quiet week. So depending on how the markets look and what the VIX and OVX and all of those volatility indices are doing, or indexes, however you want to say it, I may still try to find some setups. Now, I still have a couple of XFAs left. One of them is still getting transferred into the live, so I'm still waiting for that. And until I kind of get a good idea of what is going on, I don't think that I will be trading too much. Like I might try to find like one trade per day. However, that's probably not going to be during London because, again, London on the products that we currently have it's very patchy. It's not really a consistent product to trade. Or, you know, RBOB during London, pretty dead on most days. Yes, it can move sometimes, but that's not the norm. So if we take, like, let's say the last year or two, or even 3 years into consideration, how often do crude oil, gold, and RBOB move during London? Not that often. You're going to have an outlier day where everything goes crazy. And we've had a fair amount of those this year. However, that's not the norm. You know, the norm is to have the NYMEX session and COMEX session move those products. When that's not happening, it means something odd is going on. And I'm always a little bit on the fence because, frankly, like, I'm just being, like, very straight with you. For gold and crude oil, those are not my chosen instruments for London at all, right? DAX is what I use for London. FTSE was something that I also used to trade quite a bit. But, you know, if we can just get DAX, that will make things so much easier for everybody. And I know they've been trying, but I think one of the problems that I can kind of figure out why they're having issues is because in order to convert anything from the currencies that, because one of the issues that I've heard they're having from MP is converting the euro per tick, because DAX is the euros per tick, right? It's a Eurex product. It's not going to have USDs per tick. And they're having a problem converting that to the USD dashboard. Now, the only reason to have that problem is if you don't have the spot Forex market to convert it into. So you would need a Forex feed in order to do that quick conversion. And once you have that, it's a very quick thing. My team has done it, you know, many times. They've actually worked for various bulge bracket banks, and they've done it many times, you know. But you do have to have the Forex feed. You can't have a futures feed because that's not the spot market. That's the spot market, not the futures market, right? So in order to convert something between the two currencies efficiently, you absolutely have to have the Forex feed. And if that's the problem, then that's the solution. And, you know, I don't know, you know, whether that is exactly the problem, but that is one thing that popped into my head as to why they might be having an issue with it. All right, so anyways, I am now trying a long DAX at 2370 on my other account. And that's basically expecting the continuation from the failed auction that we had a little while earlier. So I am running that hypothesis that we are going to retest 400s and then potentially go into that mean reversion higher. So we'll see whether that actually has traction. If it doesn't have traction, my stop is, at the moment, a disaster stop is 20,337. And I want to see it over whatever this is. This is a session VWAP, I believe. Is it a session VWAP? Let's just see. I think it's a session VWAP. So, what's going on here? Yeah, okay. So first step would be to go over 380. If we don't go over 380, I'm going to cut this early. I will be cutting it just sub 350 because 350 is kind of my orientation point for this move. And then if it turns around again, I will try this again. I give myself 3 attempts for these sorts of setups on DAX within a 3 to 4 hour period. So if I can't get in on a good move within 3 attempts, then that's my day done. So yeah, first step would be getting over 380. So we'll see what happens there. And let's have a look at the profiles on our Bob for London, even though it's not my favorite thing to be trading during London. Gold might be turning around finally as well for that run past the initial bounce high, but for now it's still inside the initial bounce, so we need that to change. Crude oil, okay, let me drag out the crude oil chart. Crude oil is still in January, so that hasn't rolled yet. But crude oil is trying to fail the auction at the moment. So we're going to see how that plays out. These blue extensions, it means it's trying to fail the auction. One caveat here is that it's trying to accept the London value from Friday. But if it fails the auction, I would consider that a stronger signal, because this whole thing is happening from GEX3 level, which is actually a pretty strong area where market makers usually start to do their hedging and stuff. So it opens up the possibility that the failed auction is going to work. And then it wouldn't be the biggest trade because the overnight VWAP is just at 87. So that would probably be my target here, 70.88 for any longs. But to me, that's barely 30 ticks, and that's not quite good enough. I want to have a profit margin availability of about 70 to 100 before I actually get involved in anything. So yeah, Paul, I probably won't trade much, but I will still, aim to do a little bit of trading, especially on DAX. So we'll see. Okay. Let's have a look at Albert says DAX nervous child. I don't think so. DAX to me is very calm. The only time it's nervous is it's when there's not enough liquidity, and you will see. So if I show you this, DAX new volatility. The only time DAX becomes nervous is if that falls down to 12, 11. But when it's 13, 14, like ideally I want to see DAX over 14 because that seems to be the cutoff point for nice intraday moves. If it's a little bit under, you can still get decent moves, but some of them may happen in the New York session. So sometimes this happens in DAX where New York session is the one leading the way. I'm going to put gold daily up here. So yeah, I actually think the DAX is one of the smoothest products that you will ever find. But you have to catch it during the right market conditions for that. Otherwise, it's not like it's never as wicky as like NASDAQ and stuff. If you compare DAX to NASDAQ, it's not nervous at all, right? It's really smooth, it keeps doing what it's doing, but it gets spiky in lower liquidity environments. Of course it will, right? Because there's nothing to pull it anywhere, right? So you're going to have a lot of spikes, and you will think that it's a nervous product. However, once DAX decides on the move, there is no 50-tick wicks up and down. It's just one smooth move in the same direction. So DAX to me is not nervous at all. DAX to me is a super, super smooth product. So I don't know what you're looking at. You're probably looking at it when it's in a low liquidity environment. And that's extremely important, right? So this is why I bang on about the volatility indexes, because it will show you when the time is right to actually run a trending move. And until you get the trending move, you can do base hits. If I'm in a low volatility environment, I will wait and wait and wait, and I probably won't even do a trade on DAX until we're like establish the range of some sort that is very visible on at least a 3-hour or 4-hour chart. And then I will use that to effectively just run a scalp of about 30 to 40 ticks. And that's it. But I say scalp, however, in a low liquidity environment, that scalp sometimes lasts for 2 hours. So you can't tell me that DAX is like really nervous when it takes 2 hours to traverse 30 ticks. So, you know. What do I think of platinum? Yeah, so platinum, let's have a look. I didn't really look at platinum much because it seems to have settled in a bit of a range. Gold could be definitely doing the attempted breakout to the upside, but we still need some volume there. Let's see what the 100 tick looks like. Yeah, I mean, they're trying, but we have this high here. This is a localized high. And that's exactly at 2680. So that really needs to go in order for any momentum setups to open up. Platinum. Okay, let's have a look at platinum. Platinum, yeah, to me for now on the daily chart, tried to go lower, now stuck in that same demand, waiting for it to go higher. But we have this whole area of a lot of volume that's kind of standing there. This is a daily chart. It's kind of standing there as a wall, as a ceiling. So I don't particularly like to see this if I'm going to run a platinum trade. Now with platinum, because it's not the fastest moving product, it lends itself best to moves that are trending moves. So if we don't have a good trend on the daily chart, you're probably going to struggle to find anything intraday. And likewise, the volatility index has fallen, which I also don't particularly enjoy. And for now, I think that I'm going to stick away from platinum, so I wouldn't really be looking at it as anything of interest for this week for my style of trading. Obviously, if you have a different style of trading, fair enough, but I don't really see anything good here. All I see is problematic areas on the way up. So we have the previous range low. We're having trouble with it already. Would this lend itself to another trending move down? No, because we're sitting in a demand. So I don't want to see this. If anything, I would like maybe to see longs from 19 and 19. And I see overnight we may have dipped almost there, but not quite. So until we actually rise up somewhere closer to this supply that also happens to be the volume point of control at 947.2, 947.5 maybe even, that would be my first area to maybe look for further down move. But as this stands, I'm just not interested in it. Another question from Paul. You just mentioned GEX3 as a level. The banks, well, not necessarily banks, but market makers. Is it where they hedge, or is it just today? Is it a general rule? It's a general rule. So GEX 1, 2, and 3 tend to be levels that would come into play on slightly quieter days, but they are absolutely levels where the market makers will defend the area. So even if you don't get a complete reversal from it, there's still going to be a slowdown. So they can still get broken. They're not like, oh yeah, it's just one singular price point. It's always going to be a zone, right? So when I say there's a GEX 3 at 750, I mean, we didn't even technically touch it. That can happen as well. It's a zone, right? So sometimes they get very close to it, and then if they have a very strong intention of moving the price away from it, that level won't even get touched. But sometimes they overshoot it, right? If there's too much liquidity, levels will get overshot. And then other times there is a slowdown around GEX, and then a little bit of a range, and then they break it. So a couple of things that I look at when it comes to GAX levels is how close together are they? So if you have, calls and puts, like you have like puts here, calls here, and then you have a whole bunch of GAX levels in between, that's not going to be a good trending day. Why? Because there's too many like speed bumps in the way. So it's like you run into one major level and then you try to get away from it, but then you run into, let's say, GAX 2, and it's like there's a lot of things that happen. So basically, I don't like to see when levels are bunched up. So I need the GAX levels to be further from one another. That's generally what gives you the risk reward on the trade if you're just going to look at options levels, right? Without anything else. I obviously look at the open sentiment because it gives me an idea of whether we're inside value, outside value, and then there's probabilities attached to that. Like, for example, if you are somewhere in the vicinity of like 1% distance from the value area edge, outer edge, of course, that opens up a lot more chance for the mean reversion trade. And that tends to be happening, like if you see the mean reversion in progress, that's actually on some of my products an event that will work about 34% of the time overall. So when the mean reversion within the 1% distance occurs, that works every time, but it happens overall 34 to 40% of the time. Okay, so the frequency of occurrence versus the success rate of the setup, those are two different pieces of statistic. And I look at those as well. So for me, these options levels are just like a supportive factor because I already have my levels that I look at. And then if I can see that something else is going on, like for example, crude oil failing the auction at GAX 3, that would invalidate what I have. So without drawing things too much, so this is the value area in purple. And then if we're going to use GAX 3 as a bounce level, it would invalidate the further move into the value area, right? So even though my indicator here says down rotation, that's great. But if this accepts value with quite some confidence and we get over these two little supply speed bumps, that's a failed auction at GAX 3. So, it's a supportive factor. So that's the way I look at things. And then obviously I have the ADR and ASR levels, which means that I'm going to be seeing whether we have exhausted those or whether we still have enough space on the day, which then further gives me the idea whether we have a normal day or an outlier day. So it's all kind of like, it's got its own space. It's not like a whole bunch of indicators that tell you the same thing. Every indicator that I am using, it's not even an indicator, is more of a lens into statistical behaviors of the market. And, market profile, what is it? It's the study of distribution curves and, how far away from the curve you are. That opens up the possibility of mean reversions. And then if we are at the distribution curve, that can lend itself to more scalpy type days and a range bound market. All of that to me, it's just like a puzzle piece that nicely and neatly kind of puts it all together. And it makes it very easy to read what's going on, right? Without discretion, without too much discretion. You can just say, okay, well, GAX, so we have GAX 3, failed auction, potential for value acceptance down, yes, but the failed auction without any sort of meandering, just kind of fails the auction and goes back, that is a stronger setup, right? But if it starts to spend time inside the value area after we've accepted it, which is the case on crude oil, that will then open up the possibility of value acceptance. So I also have the time in there too. How much time are we spending? And right now the failed auction is actually playing out. So let's go back to crude oil. And if you paid attention. I said I wanted to see it breaking through this little supply. That's exactly what it's doing. So the initial balance is here. And then the value area was actually just here. So this was value high. So let's say here was the value high from London, Friday, right? So it's not the NYMEX one. And yeah, so this is now trying to exit the value area after it tried to test it on the first try. But right now, GEX3 seems to be more important, because we didn't even, like, we just touched it. I think we touched 51. And like I said, everything is a zone. So if I put the GEX level at 50, and let's do it in red. That's the kind of thing you have. So you have initial balance getting broken, attempted early acceptance of value, but then GEX3 putting a wrench in the works and stopping everything from going further. So when I have those GEX levels, and especially if there's like a call or put level inside value, that will actually make me think twice whether the value acceptance is valid, especially if you have, like, let's say an equity index, and then you are maybe looking for longs, but you see the value acceptance to the downside. Well, I would definitely go against that on an equity index. It's like value acceptance downside. Yeah. What do equities do? They go up most times, right? So I will override that. That is the discretionary part, where me as a human, I will say this is not more likely, this is less likely. So let's look for evidence of buyers. And in which case, even if the value acceptance does work out, I would be perfectly happy not to be in on that, because it's a lower probability trade. Gigi says, do I trade NQ sometimes? Yes, but usually only for power hour and usually only in the last 30 minutes of the day. I don't trade NQ very often because I don't like it. It's a personal preference. I have some issues with brain fog due to my chronic illness sometimes, and NQ is very, very difficult mentally. It just annoys me more than anything. I used to trade it like 4 or 5 years ago during COVID. I traded it a lot because they suspended crude oil trading. So the futures went negative, everybody freaked out, and then they just suspended trading NQ, trading crude oil. And that's the time when I traded NQ quite a lot. But I was a little bit younger and I wasn't sick, so that I could handle it better. Now, every time I do NQ, I'm just like, oh, Christ, come on, make up your bloody mind. Because the way, like, even when it trends, it sort of wags around like a crazy person. And this is why I call NQ neurotic. This is why when I look at DAX, I don't think it's psychotic or nervous at all. Because if you compare NQ, which is a nervous product, just intra-candle, it's got this like crazy movement that's just like, it's like, what are you doing? And it's because it's a thin market, it's volatile, and it doesn't respect levels that well. So when you're trying to use some of the more normal levels, it's just going to wag around it like crazy. And then it's also very momentum dependent. So if you're a momentum trader and if you don't have the whole delayed gratification down, you want the market to move right now. You want the setup to happen right this second. That's going to be a perfect thing for you. But for most people, what tends to happen, having coached about 400 people in the last several years personally, is that NQ give it and then NQ take it. as well. So it's beautiful when it works out, but usually people have problems staying consistent on it. Why? Because they want more out of it. And I think that points to a psychological issue more than anything. Because, a lot of people can't just do one trade on NQ. What will typically happen, they will get smacked a couple of times and they will get one really good trade out of it, and then they will want to keep trading. That's not the way to do it. If you can control yourself and you can just find 1 to 2 trades on NQ and then leave it alone, that's what you see most of our best NQ scalpers doing, right? You don't see them doing 100 trades a day. You look at Nick for a Tick, you look at Rips, he's not going to be doing, neither of them are going to be doing 15, 20 trades a day. They do between 1 to 3. They get their momentum move and they get out. Done. If you can't do that, and if you're clicking buttons all day long, and then you go, oh, it's great, I've just made, 3,000, and then you click more and you keep clicking and you keep clicking, and then at the end you're down on the day, it's very likely that you're going to have to either move away from NQ, because that's not what you should be doing on it, or, you're just going to have to rein it in, which is a more difficult option, right? So it's not the fact that you are, you're making money. If you can't consistently make money, and if you can't stop yourself from clicking more buttons on the day when the first couple of trades don't work out, then NQ is causing mental instability inside your own head. And it doesn't mean that you're mentally unstable as a person. It just means that NQ is not the right thing for you, right? And what do we see? We have 90% of traders at Topstep all trading NQ. And just by the statistical, observation that most people fail. So, you're kind of wondering, well, why does everybody trade NQ? Because of that instant gratification that it gives you, right? Most people, especially younger people these days, they want money now or yesterday, right? They don't want to do the process. They don't want to work on themselves. So we see this all the time. NQ will be doing the trending moves and everybody's happy. As soon as you have a range-bound day, everyone is a moany effer in the chat. This is shit. I'm giving up. I'm about to give up. It's like, you give up that easily? How long have you been trading? And then it's like, I've been at it for 3 months. Ooh, 3 months. Wow. So you really gave it a go for the full 3 months. So, I kind of have a bit of a, this is where Granny D is going to come out. I have a bit of an issue with the younger generation that wants everything right now, right here, without actually having the skills to back it up. So with the NQ, I picked the time of day for NQ when I have the edge on it. But at the same time, I don't really look to trade NQ every day, okay? If I see a setup, I might put like an order in. You've seen during the reversal challenge, I can trade it. I can trade it. It's just I don't like the amount of effort and mental capital that it is required. Like, I like to walk away from my trades. I like to put on a trade, walk away, and come back to it. You can't do that with NQ. It's not that sort of a product. So you have to sit there. It's kind of like another form of a prison, right? It's not like, it's not that you're actually going into a physical prison, but you put yourself in a prison where you have to stare at the chart. And the only way that that kind of life would work for me is kind of doing like quicker trades. But then again, that doesn't match my own personality, because I like to sit in trades for 2 to 3 hours. That's just, my style of trading. And I like to get 150, 200 ticks out of that. If I have to sit in a trade staring at it, and then I still end up with like 50 ticks or so, I'm not going to be very happy about it. And then, if the first trade doesn't work out, I also don't want to sit there clicking more buttons to capture a greater move. But at the same time on NQ, I find that smaller stops usually don't work. So I had somebody on Twitter a while back who contacted me and they were like, I was right on the direction, but I never stayed long enough to actually get it going. So I was like, okay, why are you using such small stops? Oh, but because I don't want to risk more. And I'm like, okay, well, lower the size and increase the stop. And guess what? They passed their combine for the first time ever. They actually widened the stop on NQ. They were still right in the direction, and they managed to come up with a positive risk reward. So they changed the stop loss size, and they managed to capture literally the entirety of the move. So it wasn't even the trader not being a good trader. The trader was actually really good. But the size of the stops that they were using on NQ were completely decimating their results. So consider that. Consider system design. I'm very big on system design to use the appropriate stops to what I'm trying to achieve. And if you're trying to capture, 200 ticks on NQ, you cannot be using 10 ticks and 15 ticks on it. Okay? Because you're using like the most minute percentage of the entire range, which is over 800 ticks right now. So the smaller the stop loss, the less likelihood that your trade will stay long enough to actually profit from it. Food for thought, All right, so it seems that DAX has decided to go into a bit of a jump off a cliff. So I'm going to invalidate my first setup, and I'm going to see if we can get a sustained auction lower, but I first need to check some levels. Yeah, okay, so we do have some levels. So now that opens up the possibility for equities. I don't know whether the other equities are following that. Are they following? Let's see. Where is it? So no, this is just DAX dependent. Okay, interesting. We've had a divergence between US equities and German DAX. They're going, oh, we're going to go up. And Germans are like, we don't care. It's like, great. All right, let's try this. Let's see what's going on across the board. So gold is still trying to creep up. That could be slowly trying to break that 2680. So out of all of the things that we have on Topstep, gold to me looks like it might actually go into that mean reversion up to at least 2685. And then it could even go into the value acceptance all the way up to the next area, which is 2690. I have some calls up there, but we do need to see it go through 2680, and then that opens up the possibility for more targets upside. So that would be something to consider. Yeah, Kyle says, take the money and run on NQ. Yeah, if you're that kind of a trader and you want hit and run, I would feel extraordinarily bored if I had to do that, because I would be like, okay, now what? So I know myself, and I know that that wouldn't work for me, because I would just want to click more buttons because I'm not in a trade. I used to be a swing trader for 5 years in the first 5 years of my career, and I still want to have that semi-swing intraday without the nervousness of looking for scalps. I hate scalping because I think that they're very, like, the older you get, your brain will slow down and it becomes a lot more difficult to maintain the mental capacity and capital. Now, I don't know whether people know this, but focus is an exhaustible resource. So if you have to sit there for 8 hours a day doing 20 to 50 trades on NQ in order to make money, that's a hell of a lot of work. Like, why would you do that? Like, I trade to have more time and more money not to have less time and less money. And even if you had less time but more money, that's still not the most ideal thing to do. You want to be able to do other things apart from trading. At least I do. I don't want to sit at the desk for 8 hours a day. I left the corporate world so that I don't have to do that. And, if you say to me, well, I like it, yeah, that has nothing to do with reality. That really doesn't. It has everything to do with your desire to click buttons, but is it a good thing for your business, the day trading business that you're trying to build up? Probably not. So for me, it would be one of those self-imposed prisons that I just do not want to subject myself to. Yeah, 2 to 3 trades per day, more than enough. If you trade more products because, you feel that there are more opportunities, I would still say pick a couple per day. For example, I look at about 6 or 7 things, but I'm not going to trade all of them on the same day, right? I will look at them and I will go, nah, platinum doesn't look that great to me today. Oh, gold, yeah, that looks pretty good. That's back on the drawing board. What about crude oil? Well, it's okay, but I'll probably want to, see what happens during NYMEX, not right now. So, things like that. I will be very selective over what product I would trade on the day. And I have ways to figure that out. But, trading all 7, that's, I can just see so many issues with that. It's like people getting confused. Even when we introduce, let's say I've been working with someone in my private coaching and they were just trading gold. And then we introduce another product. Suddenly they can't decide on the day if they all look similar. They're like, well, which one am I going to trade? And then I go, well, okay, there's a bit of confusion there. So what are you looking at? And then we try to come up with a systematic way to figure out which one of the two right now at this part of the day looks best. And then if both of them look great and the trader really believes that both of them can be tradable, we will partial the max default position to both of them. So let's say you're using ballpark 2 micros. Well, instead of using 2 micros on gold, you might want to use 1 micro on gold and another one on ES. So still maintaining that maximum position size, but partialing your risk to 2 things. Because you don't know which one is going to move at the end of the day, right? And if you think, well, it's risk off, and I think both of them have a good chance of working out, I might want to try both. But position sizing has to be taken into context. All-time high, Sushim says, how to trade it. Whenever I don't have any levels, I turn to options levels and to ADR, ASR, because those are still further away. Now, if my ADR and ASR levels are gone as well, I will completely turn to options levels. Sometimes you can get gamma flows intraday that change, especially when you have a single direction day that goes crazy and just smashes through everything. That is a decent way to figure things out. So pure price action. Maybe some profile. If you let's say you have some single prints, you can maybe sometimes work to get those to limit risk to a degree if it's a trending day and we left single prints. It's the FVGs, whatever the ICT people call it, but it's the same concept. Basically, it's a one big move that left a gap according to where the prices used to be. So we went into a price discovery mode, left this big thing on the profile, and you can see those, and you can use those to limit risk if you're looking for a directional move. So there are ways to trade the all-time highs. I'm not a huge fan of trading all-time highs, and that's another reason why I shy away from equities, because they annoy me. But especially US equities. Like DAX is different. DAX does have an upward bias, but equally it will smash down on quite a lot of the days. And it has beautiful moves. both sides. Paul H, again with loads of nice comments there. For those that pay attention, this session has some of the best info I have ever heard on TopstepTV. Replay until you understand. This is my advice. Thank you, Dee. Paul, you're one of the people that listens to the stuff that I do say, and you actually apply it. That's why I respect you to no end. Every time I've traded with you and you've come on to be with us, you always talk so much sense. You always do diligent research, and whatever we say, you don't just go, oh yeah, I'll just take that, whatever. You go and actually back test it, and you go, hey, let's see whether this works. Let's see how many times it works. Let's see how I can fit it into whatever I'm doing. And that is the whole point of TopstepTV, right? To take the experiences that we have and the stuff that we talk about, and to mold it into your own thing. And of course, you can do the shortcut where you take on the system that somebody gives you, and it can, that can cut the learning time from like 5 to 7 years down to about 2 or 3 for sure. And that's why TopstepTV exists. We want to try and get all of this info out there, and of course, it's going to be a lot less structured. However, it's still incredibly useful if you're listening and if you can actually take some notes from it and apply it. Without application, there is nothing. So if you hear something that you like and you think might be useful, do what Paul does. Just take the information, go test it, and see if you can apply it in your own trading. That's what combines and XFAs are there for. It's all experimentation, and presumably all of you are here because you are in that experimentation phase now, and you are looking to get better every day. And how do you get better? Well, you have to keep changing, tweaking, pushing, seeing how, finding weaknesses, fishing for weaknesses in your own trading, and then aiming to slowly, one by one, knock them on the head. It's the only way. This is a journey of never-ending self-discovery, right? This is probably one of the only jobs in the world where learning never stops. Even after 17 years of doing this, I still find ways that I can improve. And my brain is always in this kind of like, how can I make this better? Is there a way to make it better? And there is a point where you just get to a stage where like, no, okay, this is still the same. So there's not that many things you can add or take away from it, but it's certainly useful to hear from other people, just by the fact that, I have contact with everybody from TopstepTV. I talk to Hogue a lot, Jay as well. We chat about setups, and, Robert Cooney, he's very knowledgeable, completely different trader than me, which is why, sometimes you want to have the opposite side of the picture. And you're like, how do you look at this? And if you respect the analysis of the other person, that can be extremely useful, right? Obviously, if you think somebody has no idea what they're talking about, it's not going to be very useful. But for the most part, everybody on TopstepTV, we're here for a reason, right? We've all traded for well over 10 years. Everybody has droves of experience. And when you hear something that we've worked out in our career, we're more than happy to share that. More than happy. What website does Nick for a Tick goes to see the delta graphics? I don't know. You're probably best to ask that. To ask Nick that. I don't know all the tools that he uses, but I do know that he uses Motive Wave. So that could be one of the things that from what I know about Nick. That could be something that he uses. Now, when it comes to delta, I do use Bookmap to see delta, and that gives pretty similar reads to what Hogue usually does. I mean, sometimes it might differ by like a couple of thousand or something, but generally it would be pretty similar. And anything to do with delta, Hogue and Nick use that a lot. I use it only when there's an anomaly, right? So let's say that we have a big negative delta in crude oil, but they keep pushing it up and it keeps going up. I would be very suspicious that that is a true move. It would be more like a short covering thing. And at some point, I want to look for a failure of that. So if we had gone into sustained auction, we have heavily negative delta, I would be looking to snipe shorts once the exhaustion comes in and once everybody's got everybody long, and then the longs that got in late have to start covering and all of them turn into shorts. So that's kind of the idea behind that. Until I see that, to me, delta is just in sync with the price. So if we have positive delta and price rising, there's not much to read out of that. Everything is as it should be, right? It's only when the divergences start happening and then that divergence runs amok and becomes massive. That's when I pay attention. All right, guys, I am going to finish it up here. Somebody's asking, we'll be live with you today in 8 hours. I don't know where you're going to be live with me, because to my knowledge, I'm not on today. But yeah, maybe I'm missing something. I don't know. I have to check my schedule. But if you're talking about the main broadcast, I'm not going to be on today. Unless they've changed something. But yeah, not to my knowledge. So if you know something that I don't, do share. Anyways, guys, I'm going to... with Topstep, you're going to be live. Right, okay. That makes sense. So you are on Trade with Topstep or Back to the Futures or something? Still confident? All right. So let's all tune in. Yes, let's watch Still Confident to show our support. Obviously, we always want to support everybody here. There we go. Yes, I got it. I'm still not awake. You can probably tell that. I'm functional, but not, What journaling software do I use? I use Edgewong personally, but I've also used the XFA one on Topstep X. So, yeah. We don't sadly have the analytics on the live accounts, which is a shame, but hopefully that will be coming at some point. Anyways, thank you so much for being here with me, guys. Always appreciate to see everyone. Hopefully we've learned a few things in today's class. It's rollover week. It is FOMC week. We've got Christmas coming in 9 days. So yeah, let's try and rein it in, kind of wind it down for the year. And yeah, let's see what happens this week. I'm not expecting massive fireworks or anything, but we could still have some stuff. Oh, so Bruno says to me, apparently I'm announced to be in the main broadcast all week, apart from Friday. Am I? Okay. That's new. Yeah, so I'm going to reach out to the production. I think we've had some of the production guys that are away, so we're having a little bit of trouble with keeping up with things, because some of the producers that usually will let us know what's going on are not around. But yeah, we'll work it out. So we'll see. It could be that they're maybe putting the London stuff every day. I don't know. So I'll see what that's all about. Anyways, thank you for being here with me. Check out our Discord. Obviously, we have over 100,000 people in there. If you're looking for trading buddies, if you're looking for more answers, our coaches are in there. They all have our designated rooms where you can ask them questions. So do have a look at that. I'm going to drop the form in there. Until tomorrow, I will bid you adieu. And like I said, let's not rush. It's Monday. It's rollover. So take it slow. Try to rein it in. Yeah, I will see you guys tomorrow. I'm Deeyana Angelo, a.k.a. Market Stalker D. And this has been the London session on TopstepTV. I'll see you tomorrow. Take care.